The FTSE China A50 index tracks the 50 largest A-share companies listed on the Shanghai and Shenzhen stock exchanges. From Baizhou leader Queicho Motai to electric vehicle, EV, battery giant Contemporary Amperex Technology, CATL, it includes some of China's most influential firms. To better understand the FTSE China A50 index, let's take a closer look at its top 5 holdings, which make up 1/3 of the index. 1. Queicho Motai. This is China's top Baizhou brand. Its premium liquor is a fixture at formal events, and the company has expanded into lifestyle products like Motai infused ice cream and coffee. Outlook. Despite a 20% price hike in late 2023, Queicho Motai posted 16% revenue growth in 20,241. While slightly below expectations, this highlights its strong brand and pricing power. Government efforts to boost domestic consumption may further support demand. Although Queicho Motai has declined 0.1% year-to-date, the company has historically performed well, with annualized returns of 4.4% over the past 5 years. The stock is also trading below its historical valuation, suggesting attractive upside potential. 2. Contemporary Amperex Technology, CATL. This is the world's largest EV battery maker and a key supplier to Tesla. It recently raised $4.6 billion in its Hong Kong IPO, with shares jumping over 16% on its trading debut amid robust investor demand too. Outlook. Despite a global slowdown in EV demand and declining battery prices, CATL has maintained its dominance in the global EV battery market with a 38.2% market share. 3. The company achieved a 33% increase in earnings in Q1 20,254, highlighting its strong fundamentals. CATL has recorded negative returns in the year-to-date, largely due to geopolitical headwinds. Of the 5 top holdings, CATL has the largest U.S. revenue exposure at 9.7%. 5. However, company notes the U.S. makes up a small portion of its shipments, so tariffs will likely have minimal impact on future performance. 6. Moreover, CATL has historically been a strong performer, with annualized returns of 26.7% over the past 5 years. Its valuation is also below long-term historical average levels, suggesting attractive upside potential. 3. China Merchants Bank. As one of China's largest commercial banks, its offering includes a wide range of financial services, including retail banking, corporate banking and wealth management. Outlook. The bank has seen strong momentum in its wealth management business, with retail AUM rising 12% year-on-year in 20,247. China Merchants Bank has gained 10.5% so far this year amid a wider trend of investors gravitating to Chinese banks for their attractive dividend yields. However, valuation remains undemanding, hovering slightly below its historical average. 4. China Yangtze Power. This is the world's largest listed hydropower company. It operates the Three Gorges Dam and other major hydropower stations along the Yangtze River, contributing significantly to China's clean energy output. Outlook. The company posted a 19% rise in net profit in 20,248, driven by increased electricity generation as China experienced heavy rains in 2024. Long-term prospects are supported by China's clean energy goals, with hydropower playing a key role in the country's carbon neutrality targets. China Yangtze Power has delivered solid returns of 15.7% over the past 5 years and is up 2.2% year-to-date. However, the stock currently appears slightly overvalued. 5. BYD. This is the world's top EV seller and the 6th largest automaker globally. Outlook. 9. BYD is aggressively expanding, targeting over 800,000 overseas vehicle sales in 2025, while increasing domestic market share through competitive pricing and value-added features. Consequently, its Q1 2025 net profit doubled year-over-year, the fastest growth in nearly 2 years. 10. BYD is up 24.6% year-to-date and has generated average annual returns of 44.2% over the past 5 years. Despite this strong performance, its valuation remains at attractive levels. How to invest in the FTSE China A50 index. Investors can gain exposure to the FTSE China A50 index by investing in exchange-traded funds, ETFs, that track the index. For Singapore investors, the UOBAM FTSE China A50 index, SGX, JK8, is an attractive option that is listed on the Singapore Exchange, SGX, and offers trading in Singapore dollars. This offers convenience for Singapore investors who do not wish to bother with currency exchange issues. The ETF can be bought from just one unit, and Singaporeans can also invest in the ETF using their SRS funds.